presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic weekend. Let's take a look at what we got going on right now, okay? A little bit of inaction, again, pretty substantially, just light volume going on, okay? SPY is off about 0.16%, trading at 549.78. I think people are exhausted, huh? I mean, look, you had a beautiful rip up in the morning here, and we've just been lower since then, okay? We bounced off the 545 level, coming right back up yet again. You had the composite trading off 0.43%. At 17,370, the Dow Jones Industrial moving up 0.11% at 40,158, with those Russell futures trading flat. 1964 and 60 cents. Take a look at the dollar. Man, just a nice collapse in the DXY today, trading at 98.96. Let me check real quick what we got going on with the 10-year. I've been reading up a lot of stuff before the show here. We'll talk a little bit about Teradyne. A little bit about Nucor, which has earnings coming up. Teradyne also has earnings after the bell today. All right, I mean, the 10-year yields are definitely coming down. You're trading at 4.21%. Not a massive movement to the downside, but any basis point movement is good for us to the downside there. Taking a look at crude, trading off 1.6%. Okay, at 62.01. I think a lot of this is slowed down with manufacturing, okay? I mean, Dallas just reported some of their manufacturing business index off 35.8. I mean, there is some market slowdown right now, at least coming out of the Dallas Fed. I wonder if, kind of what we were discussing last week, like we might actually be in this recession right now. It'll be very interesting seeing what CPI has to say. PCPI is, this is really going to determine, how we kind of move forward and what we do. Let's take a look at gold is continuing to move to the upside, right? I mean, there's still this kind of major air of risk going on, right? And I mean, really, seeing some of this emotion over the past few days, again, not a ton of action, okay? You're getting movement to the upside for sure. But there's no volume, and it's a little quiet right now, right? VIX continuing to move up a little bit. You're up about 3% today. Looking at copper, you're up 0.19%. Silver up about 0.29%, trading at 33.42. Celsius coming off a little bit. Google coming off a little bit after some pretty solid earnings. Of course, we have Microsoft coming up, I believe, on Wednesday. And if anything, how Google did with cloud, and some kind of positive commentary around the future of data center spending and AI spending, right? We may see some okay earnings and forward guidance coming out of some of the hyperscalers, so we'll be following that for sure. Roku up 2.77%. Fubo has earnings on a Friday as well, and Palantir's up. Yeah, NVIDIA off. Why is NVIDIA off? Okay, so Huawei comes out and says, hey, we're going to start competing with some of the computer chips, some of the GPUs that are currently shipped to China from NVIDIA. I think what is the point here? One, I think people are exhausted, right? I mean, this is a 3% to the downside. Okay, at some certain point, there is so much confusion and uncertainty. You have Besant coming out saying it's up to China to, essentially have this kind of trade conflict end. And I don't know what that is supposed to telegraph to anyone, right? And it's exhausting. I mean, it really is. So I do probably anticipate some further contraction of volume going forward. Of course, you'll still get price swings, but we're going to start getting into this, in my opinion, very narrow trading range kind of deal. Of course, as new numbers come out, that will probably affect the market negatively. There's going to be issues with shipping. There's going to be issues with trucking going on. We are going to start seeing the effects of tariffs in the upcoming, price indexes. So, again, as I've been saying, I don't believe we're out of the woods yet at all. I haven't really added it to any position whatsoever. Still in UUUU. Of course, that is just a long-term hold, but we are green, which is very nice, all things kind of considered. And it's like you're almost flipping right now. Okay, so what do we want to look at today? Well, first things first, got to check over here. It, of course, is a Monday. All right, and you know what that means. That means we're going to go over to TFNN.com. And I am going to pull up my program on the left-hand screen here. How about that? We're going to move over right now to the newsletters tab. You're going to see right here, top right, Mastering Probability Newsletter by Steve Rhodes. Of course, we have Steve on every Monday. He has the Trader's Edge at 11 a.m. Eastern Time right here on TFNN. If you have not checked that out, I strongly recommend doing so. And I recommend checking out Mastering Probability. It's very thorough. He goes over quite a bit of things. And of course, we really enjoy him coming on and sharing in his analysis, because I think he looks at some kind of unique ratios and relationships between currency pairs or currencies and let's say the SPX or certain indices that really give us kind of a unique insight into kind of what's going on not just a small scale but on a larger scale as well. Steve, how are you doing?
Hey, Jacob, I'm doing great. Yourself?
Doing very well. Weekend was pretty good. A little bit cool out today, so enjoying the beginning of the week.
Yeah, well, the only thing that's important today is 7 p.m. and the Lightning versus the Panthers.
That's right.
Right? All this other
Go
stuff
Bolt.
doesn't matter.
Yeah.
No. But hey, look, the Lightning had a nice game on Saturday. So tighten up the series. So tonight's game, I should say, is going to be really important out there.
Absolutely.
But, I think we should have my chart up on the screen here, which is the New York Stock Exchange chart. I believe that we were taking a look at this last week. And so I just wanted to kind of update you and everybody on this set of tools out here. So the top portion of the screen is the New York Stock Exchange. Right below that is the actual advanced decline line, and below that is the advanced decline oscillator. The advanced decline oscillator takes the advanced decline line and it looks at the difference between the 39 and 19 period exponential moving average. That creates the oscillator. So a number of different things transpired last week, especially on Friday. The first thing is the advanced decline oscillator has moved into the overbought condition. Mm-hmm. It does that when the advanced decline oscillator gets above the plus 150 level. You can see even right now we're at 187.46. Cool thing about this, so the overbought condition has to be worked off. We'll talk about that when we come back from the break. But the more important thing is when we get above plus 150, it tells us we have higher prices to come. Oh. Not necessarily tomorrow, not necessarily the next day, but maybe weeks or months from now. So I don't think the rally to the upside is over by any stretch of the imagination.
Perfect. Steve, please stay right there, folks. We'll be right back with Steve Rhodes after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're joined right now by Steve Rhodes of Mastering Probability. You check out his newsletter, Mastering Probability, at tfnn.com/collections/trading. Steve, before we went to the break, taking a look at the some charts for the New York Stock Exchange, the advanced decline oscillator. What do you see in that?
Yeah, again, an important point to make, and people can generate this chart on their typically on their screens. And but when we get above the plus 150 reading, it tells us about future higher prices out there. And somebody can go back, they can take a look at it, they can pinpoint those dates, that data, and they can see that it happens it's the most consistent pattern that I've seen out there. Not saying we're going to new all-time highs, but and when I say the rally isn't over, I'm just saying that in the future weeks, months ahead, we should see higher prices inside the New York Stock Exchange. Now, there's two different ways that an overbought condition tends to get worked off. The first way is the one on the very left-hand side, where we've got this left rectangle out here. And the top portion shows price, the bottom portion shows the advanced decline oscillator. And so where my cursor's at right now, you can see that was the high, which was July 16th on a closing basis inside the New York Stock Exchange, as it was with regard to the advanced decline oscillator reading, which was up at about the 238 level. So it got into that extreme overbought condition. How price worked its way off is it basically started moving lower until it went ahead and bottomed back in the early August time frame. But if we take a look at today's price action, we'll see right now that the New York Stock Exchange has actually ticked to the upside with the oscillator moving to the downside. And that really suggests that it perhaps, right now, the clue is that it might be the type of top that creates a divergence. And the divergence would be prices moving higher, but the advanced decline oscillator is moving lower. Eventually, that will lead to some type of correction out there. So that's the first thing. And that took place on Friday. We're getting follow through today. There's another thing that took place on actually, I think it was Wednesday of last week inside the New York Stock Exchange. And it was a trading session actually of, today's Monday, Friday, Thursday, Wednesday. On Wednesday, I didn't even notice this. But if we take this is the daily time frame chart for the New York Stock Exchange. Yep. And what it did on Wednesday is it triggered an A to B equals CD pattern to the upside. I'm going to turn these trend lines off just for a moment. We'll come back to those. But here, if we could take a look at the B point of this A to B equals CD, was the high from April the 15th. Now, I don't have volume out here for this index, but we closed just above 18,604.06 last Wednesday, April 23rd. And that triggers an A to B B equals CD pattern to the upside. And that suggests that what the New York Stock Exchange wants to do is move up towards a 19,641-ish type level, or really get back into the highs from March 25th out there. So we've got that pattern to take a look at. There's another pattern that I look at inside of the New York Stock Exchange, really with the S&P 500. But I'm sorry, it's really the S&P 500 that I take a look at. But it all kind of encompasses, and that is, we spoke about last week, we spoke about the VIX being in contango.
Yes.
And what contango is when the current future contract is trading trading above all forward future contracts. What that is a signal of, that's a signal of like a screaming Mimi baby, a whining baby out there. It's very short term, and that's really what I mean by that. Now, what I have on the bottom panel of my charts out here is I have the comparison to the ratio between the VIX and its 3-month counterpart, its 6-month counterpart, and its 1-year counterpart. When those ratios go above zero, which they had been above zero for several weeks out there, that sets up that contango pattern. Now, what's really cool about this is this is not how you would catch a bottom. All right, because this is typically it's not how you catch a bottom. But what you're looking for are confirming signals. There are a number of people, in fact, newsletter subscribers went long based upon this and other TD9 count patterns that we saw inside the indices for their daily or weekly timeframes out here. But this on Friday went ahead and triggered the bottom signal for the 6-month and the 3-month time frame. Right now, today, at this very moment, which is great doing the show live out here, is we've ticked just below 1 on the 1-year ratio of this. So if we do close below that, this has given us a signal of at least a bottom that was out there. But I want to go back quickly just to the New York Stock Exchange and throw one. So we've got an A to B equals CD pattern to the upside. But what price is going to have to deal with here is going to have to do with trend lines. So you can see that right now we're already dealing with a couple different trend lines that we have out here. So we've got a trend line that basically is coming from the high of March 26, and that's taking a look at the high from April 3rd, and that's a trend line that we're running into. Is this the end of the move? I don't think so, but we are in an overbought condition. So to suggest that the New York Stock Exchange could pull back, that would be normal. But again, we looked at right now that price the pattern might be that price in New York Stock Exchange is going to drift higher with the advanced client oscillator moving lower out there. So there is some trend line resistance, but that does not mean that we have hit a top. In fact, if I go back out here, take a look at one of the sectors inside the S&P 500. It's the XLB. It's the materials sector. Mm-hmm. And what the XLB did on Friday, and there's very few of them, it actually confirmed an A to B equals CD pattern to the upside, and it did it with volume. The B point on this pattern would be the high from April 15th. And we took a look at April 15th, I believe, on the New York Stock Exchange. And there was 4 million shares that traded hands that day. Last Thursday, price closed above it with 5 million shares. So inside the S&P 500, the building materials sector, the XLB, has a confirmed A to B equals CD pattern to the upside. We'll give you its initial price projection here momentarily. It's 87.55. Now, I think that more likely than not, the XLB will do more than a 1-to-1 move to the upside. And the reason I say that is its retracement was only a 0.382 retracement. It was actually just shy of that. It was 36% out there. And typically when you do a retracement that's less than 0.618, you'll do more than a 1-to-1 A to B equals CD pattern to the upside. Now, that's what the daily signal is telling us. The weekly says none of that is going to take place until price gets back inside its profile. And the bottom of that profile is 83.19. So for those people that might be inside the XLB, things look pretty promising right now, but price still has to take out resistance. This is the reason that I like to take a look at a daily and a weekly and a monthly time frame chart together, just to give us the bigger picture. So there is resistance, but if we start seeing it close above 83.19, Jacob, that says the XLB wants to make an A to B equals CD to the upside. And we want to watch, other symbols, other instruments. I don't see much in the way of the Mag 7, with one exception. Perhaps one of the most successful stocks out here, and you already know this, I'm sure, but I'm going to put this up on the screen, is Netflix.
Yes.
This is my set of charts here, Jacob, that take a look at. Now I've added a daily time frame. So the other chart we were just looking at, we're looking at monthly, weekly, and daily. The reason I wanted to put the yearly chart out here was because when you start trading above prior year high out there, you're in a bullish breakout mode. I mean, those are stocks you're really looking for to the extent that you yourself are in a bullish mode. Now I can see that this is also going to be bar number 9 of a TD9 count. That says there could be a top this year or next year out there. Well, how are we going to know? We're going to know by taking a look at what goes on the monthly, the weekly, and the daily time frame. The monthly time frame, because of last week's move, has now triggered bar number 9 of a TD9 count. That says that Netflix should form some type of short to intermediate term top between this week and next week. I'm sorry, this month and next month. Sorry about that. Didn't mean to. I want to make sure I got that clear. This weekend, this month, and next month. When I look at a weekly time frame chart, and this is pretty cool. The weekly time frame chart for Netflix, its B point was Valentine's week, February 14th, and the volume there, 16 million shares. Guess what we did last week? 35 million shares. We took out its swing point with big volume. Netflix has got higher to go, but you probably already did that.
It is an unbelievable equity compared to everything else. Steve, thank you so much for coming on. We'll see you tomorrow at 11 a.m.
You bet. Take care, Jacob.
Take care, Steve. Folks, stay right there. We'll be right back. We got some equities to look at.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Jacob Shoup, watch the Tom O'Brien Show. We were just joined by Steve Rhodes of Mastering Probability newsletter, and of course, he has the Trader's Edge Show on 11 a.m. Eastern Time, right here on TFNN. Check both of those out. Really recommend checking out Mastering Probability newsletter. Listen, if this is your first time subscribing, I know we have a lot of new listeners because of everything going on in the market, which is always fun. You can get any of our newsletters completely risk-free. We have a 30-day money-back guarantee. So you can check out all the newsletters if you like and find which one works for you. Additionally, you can also just email me at jacob@tfnn.com. Tell me what you're looking for, and we'll put you in there. But Mastering Probability newsletter is a fantastic product that we offer here. Okay, so we have some interesting earnings happening right now. Okay, so let's take a look here. Of course, you have Waste Management as well after, Cadence Designs. There's so many. Unfortunately, I was just busy with family and like personal stuff this weekend. I wasn't able to kind of sit down on my Sunday and look through all this. But so you have Waste Management coming out, Cadence, okay. Obviously NXPI for semiconductors will be interesting. Nucor, okay. Teradyne as well is coming out. We're going to talk about both of these. Nucor, okay, up 0.54%, okay. Largest steel manufacturer, steel recycler, building out a bunch of plants. Really solid U.S. steel play. Okay, they have earnings coming up after the bell. Let's take a look at a company. This is one that we used to play quite a bit, Steel Dynamics. They did phenomenally on earnings, okay? So they actually did miss some of their revenue. This is Steel Dynamics. Give me a moment here so I can pull up what they want to say about it. But what is moving this equity to the upside is its kind of forward guidance, right? So, Steve brought up Netflix, for instance, right? And so why is Netflix such a cool play right now, or, why was it, is, you're a little bit free from the impacts of tariffs, right? And the idea with U.S. Steel, and this is kind of what Steel Dynamics is saying, is that, listen, like the demand for steel is going to be there. Right. You're putting tariffs on cheap Chinese steel. Things obviously like American steel manufacturers pick up that slack. Right. And I feel like we spoke about this. Yeah, it would have had to been like, right before all this kind of popped off. Right. And my fear is like, while that is true, all else equal, if you get any kind of major contraction in, say, something like manufacturing, this becomes a problem, right? Where you don't necessarily get to fully benefit, from people only being able to really buy your product, right? In the event of something like tariffs. So they say here, give me a moment just to look this up. Yeah. So this is for Steel Dynamics. Improvement in earnings was driven by record steel shipments and supported by solid results from our metals recycling, its steel fab operations. Underlying steel demand improved in the first quarter as customer orders rebound and backlogs increased throughout the quarter at our steel and steel fab operations. Steel prices improved throughout the quarter from the lows seen in the second half of 2024 as trade actions have seen imports decline from recent highs. Okay. So we see the benefit from these higher steel prices in the coming month as lagging flat-rolled steel contracts roll in combination with their ongoing value-added flat-rolled steel. Okay, there are firm drivers in place for continued growth. That is, when I read that initially, when they placed earnings, I was like 100% correct, right? And, extend that out to now Nucor, right, which would really benefit from something like this, right? And of course, Steel Dynamics is going to be a little bit pricier. They're a smaller company, a little bit more agile, right? But, all things considered, Nucor would benefit very positively from that. I was about ready just to say, hey, let me just add some shares on Nucor. It is a great company. Cash to debt is phenomenal. They're expanding operations. If this idea of really rebuilding some American manufacturing and, whatever. All these kind of massive data centers continues. Obviously, Nucor will benefit from that in a major way. I am just now concerned with the manufacturing number, right, from the Dallas Feds. I mean, that is a pretty strong contraction, right? So, what is the real opinion on this right now? I don't necessarily see Nucor countering the sentiment that Steel Dynamics has, right? Meaning, listen, we're going to have higher prices. Obviously, we're not going to get complete slowing of any manufacturing. If they want to build, they're going to be buying American steel. I just, again, my whole fear right now currently, and it's always been with the market, is just this level of uncertainty. I've spoken about stagflation on here quite a bit. What you're seeing right there is what the Dallas Fed is saying, that is very staggy, If that is indicative of anything else going on that we're not aware of yet in the US, then you can run into serious problems. Unfortunately, part of me now just kind of wants to, I hate it because this morning I was like, let's get some Nucor. Like, I just had other stuff going on before I could make the play. And then I read that, and it makes me fear a little bit of what's going on. Now, granted, okay, if this is indicative that we really are in a recession, you get into this now, you hold it, and you're good when we rally back up. And I think that is going to be the case with Nucor. I mean, this is a great company, and it has been for quite a while. But I think for this earnings, I just kind of want to sit for it because I'm kind of concerned with that manufacturing number, And that could prove to be the wrong choice. And if it is, you sit back and we analyze where we went wrong and try to make adjustments, from there. So that's for Nucor. What else we got going on? Of course, waste management. Don't want to cover that too much. On Tuesday, of course, you have AstraZeneca, getting Pfizer, Spotify, Coca-Cola, Visa. Assuming we'll probably do not super poorly. We move over a little bit to Teradyne. This one, so what does Teradyne do? Okay, so they sell stuff that tests semiconductors, right? So if you're kind of bullish semiconductor right now, and especially going forward, which it does seem like we're going to continue moving forward with all this, right? From the words from Amazon and Google, Teradyne benefits very positively from that. Okay, of course they sell testing as well for robotics, which I think on a long-term kind of exposure is very interesting. One of the things that's important to understand with Teradyne is when they released this earnings, it's the last one, you can kind of see a massive fall off. They had kind of bad forward guidance a little bit. They revised downward to the lower end, again, citing tariff issues. They have a very large exposure to Eastern Europe, which makes me nervous. We'll talk a little bit about how we can maybe handle that when we get back from the break, because this is a good company.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup watching Tom O'Brien Show. Get the last full segment cracking right here. One last thing I think I want to say with Nucor that I think could be, somewhat positive for it is your, I think the price point of Nucor is kind of reflecting the way that I feel with this, right? I think if we didn't get this, appearance of a contracting industrial landscape for the U.S., I think this stock would be doing quite well. And it did rise along with Steel Dynamics as well. We'll just have to wait and see on it. Unfortunately, this is just not one that I feel. A lot of the ways that I like to do some of this stuff, obviously, when you're in November, December, you can just buy whatever you wanted on earnings, and the thing was going to go up, and we were doing fine with that. But when it starts getting to these levels of uncertainty, for me personally, what you do is you do very few high conviction trades, right? And, just the way my brain is weighting everything, the manufacturing risk was a little bit sketchy to me, somewhat. So we'll see what happens. Move over to Teradyne. Okay. These guys, I think, are not going to have great forward guidance because of their exposure to East Asia. I just can't see how they can be sure of really anything. But what I will say to that is, let's say you get to the event where they do have pretty bad earnings, right? Pretty bad forward guidance. There will be a reaction to that. If we get anywhere near that 65.77 level, for me, that is a buy. Teradyne is, I like what it does. I like the testing of the chips. I like the expansion into robotic solutions. They have, number one, just the automation of, articulating arms in warehouses and everything. This build out is going to be huge. And, additionally, they have your automated, on-path kind of pallets, essentially, right? They move boxes. And I really like that. And I like that exposure. We're going to talk about Rockwell for the same reason. Rockwell's doing fine with kind of trying to clean up its balance sheet, really kind of clean up its operation expenses. Teradyne doesn't necessarily have that big of a problem right now. They have decent cash flow from operating activities. Their hangover at the end is pretty decent. Cash and cash equivalent for the end of the year, about $553 million there. That's positive. given net cash provided by operations is $672 million, So, and their revenue continues to grow pretty steadily, right? They have a nice balance sheet. Okay, cash contracting, obviously, but, you consider total assets, assets to liabilities. You're looking at $3.7 million versus $889,000, which is pretty solid. Did I been saying million? Yeah, right. That's right. No, it's 3 point. No, give me a second here. No, I'm so sorry. This is in thousands. My bad. You're talking like 3.7 billion in assets and 889 million in liabilities. Regardless, point being, ratio is still the same. I think they're situated pretty well. I'm just concerned about buying right now, given that forward guidance for things like their exposure in Asia. They did have a downward revision, not for Q1, which is what they're reporting on today, but again, it's that forward guidance, right? So they say here they're anticipating a second quarter revenue to be flat to down 10% from the first quarter, and full year revenue of up to 5% to 10% year over year. I still think you're a little bit undervalued even with that. They said trending towards the lower end of the previous 2026 earnings models. Okay, one thing I like as well, I think this should be recorded in Q1, but they bought something called Quantify Photonics, okay? And they manufacture our favorite thing, the photonic integrated circuit testing devices. And why is that interesting? And I don't think this is a near-term thing for Teradyne, but what we're talking about is how GPUs and CPUs kind of work, right? They shoot electrons, okay? The future looking forward, especially in my opinion, and I think you're seeing a lot of interest starting to develop in academia and some of the more, maybe experimental areas in manufacturing of using things like photons or just light particles in order to convey information on the chip. So I think that's really solid, falling through. Again, that's going to be a big CapEx initially. So we're just going to wait to see kind of, again, what happens with Teradyne here. I do anticipate a little bit of a sell-off with Teradyne, not super high IV or anything like that. Any kind of pullback on Teradyne, definitely want to get into that on my end. And again, I don't see an upward revision of their downward revision whatsoever, because things haven't improved. And again, I think the uncertainty still reigns pretty supreme. And we only have a little bit of time left in this segment, but let's take a look at SPCB, Supercom Limited, okay? So they're off. This is when we were looking at and kind of musing, is there a potential for them to post decent earnings? And what we're looking for really is some pretty strong revenue growth in the company. Net income has always been okay for them. But what had been happening is they were breaking into the U.S., right? And what these guys do is basically electronic monitoring in the prison systems, okay? They have a massive contract out in Israel. This isn't an Israeli company. They have pretty good exposure out in Europe. I believe they have a big deal with the Romanian government prison system, and they're expanding a little bit out into Asia. The thing that was extremely appealing was them breaking into the U.S., right? So this is reporting on last year. That is right at the tail end of them really getting a ton of contracts. Now, the problem that exists with Supercom Limited is the same problem that we've had with, things like Big Bear AI in the past, or, any of the quantum companies, is that they publish, and this is really like this isn't, a penny stock or anything. I mean, you're pretty close now with this. But even with some of these smaller and really micro cap companies like you're seeing right now, is they don't tend to disclose the value size of contracts, okay? So they've established a ton of great contracts, but they don't say how much they're making on it. And from my experience, really getting into the nitty gritty with a lot of these kind of micro caps, that's not always a great sign, right? Because we've seen things with like CTM, for instance. I can't think of the other one we were looking at is in the past, but they would publish their contract sizes. And the reason you do that is because if it's a good number, you publish the number, right? So we kind of take a look at how they did, right? So the revenue, and again, keep in mind, right? Like, we're looking for some pretty good growth in this company. It is expanded into the U.S. This is potentially the largest prison market that they're going to have. Okay, you only get a revenue increase of 4%. You know, and some of these contracts were made again after when this would have been reported, but they still had some pretty solid contract growth in the US during this reporting period. And that's really tough for me. We'll talk a little bit more about them. Not everything is horrible for them, but that revenue growth is a little bit rough. Folks, stay right there, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup watching the Tom O'Brien Show. We got a short segment here with Supercom Limited. Okay, this is one that we were a little bit interested in. They had some very bizarre interactions with their lenders in debt to equity kind of transfer, right? Where the lenders basically paid $45 a share. Very weird, yeah. I mean, the way that I looked at that, it's like they either think they're going bankrupt and they just need some of their cash back or something, or they actually believe in the company and that allowed them to kind of rework some debt for the longer term as well on top of the transfer. So you're off 22.17% right now. Okay, this is pretty tough for them. what did we want to really see? Gross profit, of course, is good. Sometimes with like some smaller micro caps, small caps, the gross profit isn't necessarily the most important thing, right? A lot of times you just want to see a pretty big increase in revenue, because at some points when they grow to a certain scale, you can kind of work on your input costs, right? The thing with Supercom is they have traditionally posted positive gross profit, right? I mean, it's not like they're developing any further some kind of insane technology. I mean, they do have tech that separates them from the competition, which is kind of why they've been supplanting so much of the competition in the U.S. But what I'm kind of fearing is that the contract sizes just aren't that big, And again, they do electronic monitoring for the justice system. Okay, so. And really what they've been targeting is a lot of counties, okay? They've had some state contracts, but these are going to be in the South and everything. You're looking at a market cap right now of 21 million. You had a revenue increase of only 4%, but we're talking of a number of 27.6 million, right? You had gross profit of 13.4. That is a decent growth, okay? Margins are good. There's a chance to this that a lot of this is going to be some weird short seller messery, right? Which you get with these smaller market cap stocks. I know we're going into the news, but I'll talk some more about this as well. Folks, thank you so much for joining me today. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.
Building wealth